Nilesh Shah is now with us, Managing Director at Kotak Mahindra Asset Management Company. He's our market master of the day. Nilesh bhai, good morning. Good to have you with us here as always. Prashant this side. Ab kya, Nilesh bhai, is the question. And the other question is, are we there yet in terms of having paid the price for the excesses, etc.? And let's just divide this question in two parts. For the Nifty, which just purely on a P multiple basis seems to have fallen to averages, and then mid and small caps. Go on, Nilesh bhai.
So, Prashant bhai, as of today, it looks like FPIs are aggressively selling. On Friday, net of passive funds buying of about 8,000 crore. The gross sell number was about 20,000 crore. Never stand in front of a running train. If they are selling aggressively, undoubtedly buyers will continue to buy at lower and lower prices. And as long as their selling continues, we think markets unlikely to settle. Buyers will continue to buy at a lower and lower prices. In terms of valuation, now Nifty is trading little below its historical average valuation. This is a fair value market. The excesses of the past has been corrected. And now this is probably time for long-term investors to start accumulating. But keeping in mind, don't stand in front of a running train. In the small and mid caps, again, there is a divergence. Last quarter, mid caps earnings growth was in line with expectation at more than 20%. Small caps degrew by similar amount. And again, it was little below expectation. So within small and mid cap, go for quality, go for reasonable valuation. But do remember that right now the mood of FPI is on the selling side. It is your opportunity to accumulate, not to buy everything today.
Got that. So let's just spend 2 minutes on this FPI bit, right, Nilesh bhai? So as you said, aggressive sellers still, and buyers will come in, but at lower and lower levels, right? And there's only limited amount of cash for people who are doing it themselves, who've got systematic investment plans. That's, of course, getting deployed at lower levels, and over the long run, hopefully that will play out. But just your feedback, because you interact with a lot of people in the ecosystem. What is behind this FII selling? And recently, one has picked up another line of argument that, and just a clamor for the government perhaps to look at taxation and things like that, or capital gains tax, and how maybe the hike was a mistake, comparison with other countries. I'm sure you would have picked up on all those things. Just wanted your thoughts there.
So one, trying to figure out FPI is like five blind men trying to identify elephant, because there is no one homogeneous set of foreign portfolio investors. The university endowment funds and sovereign wealth funds have been buyer in our market. The long only, the passive, the US-based FPIs, some of the pension and insurance companies have been sellers. So within FPI, not everyone is seller, not everyone is buyer. Now, some of the reasons why FPIs have turned sellers: one, Indian market had expectations built in, and the September GDP growth number, December GDP growth number, as well as quarterly earnings of September 24 and December 24 quarter came below expectation. It couldn't justify those valuations. On top of it, America First, Make America Great Again, resulted into American vacuum cleaner starting, which is collecting money from all the emerging markets. Every emerging market is witnessing outflow, and China hasn't published numbers since October 24. So we don't know whether they're receiving inflows or outflows. But if someone is not publishing number, your guess is likely to be as good as mine. Number three, our rupee also was overvalued. That provided good exit to the FPIs. If I have to sum up, maybe there was a trade where rupee was likely to come down, Indian market was likely to come down, American market was likely to go up. There was a trade waiting to be taken, and FPIs took it. A large part of that is now behind us. But right now, the momentum for FPI is on the selling side. But do remember, they are doing quit emerging market and ghar wapsi to America. And not every FPI seller. If we look at the data of December 24 quarter, sovereign wealth funds and university endowment funds have been buyers. Yesterday, I was on a panel with Samir Arora, where he said that being an FPI, they have received net inflows for December as well as January month.
That's good to hear.
Just on the other point, second point, do you think this clamor to cut capital gains tax, right? We're all in the market. We all want higher. Everybody wants higher prices, but I mean, the government has got to look at their own thing. Where do you come in this debate? That there is one point of view. As markets correct, everybody becomes more introspective. That maybe this was a self-goal, capital gains tax should not have been touched, etc., etc. Just wanted your thoughts there.
So one, there should be parity. Gujarati mein kahavat hai, घरना छोकरा घंटी चाटते न उपाध्याय ने आटो. Our own kids at home are starving and then we welcome visitors. We should not be doing it. Investor is investor, whether it's domestic or global. We should treat them equally. Second thing, just reducing taxes does not guarantee return. What if tomorrow FPIs demand guaranteed return? Will we succumb to it? I don't think so. We should be focused on creating earnings growth and governance. We have delivered better return than all the emerging markets put together. We have delivered better return than China, Brazil, Russia, South Africa. Yes, last 7 months have been bad, but people have made money over here, and on that money, they are paying taxes. So it's not an easy answer. People who are demanding lower taxes for FPIs are probably also demanding stability in taxation policies. Once they know that there is X amount of rate to be paid, they want that to remain constant for a long period of time. So there's no easy answer, but my recommendation will be treat all investors alike, whether it's foreigner or whether it's local.
Okay, that's a very interesting aspect, Nilesh, and brave of you to say that. Usually one would sort of jump to say that yes, cut capital gains tax, but that's not what you're saying. I mean, I get the drift that tax policy cannot move with the swings of the market. Then we'll have to change taxes maybe every 6 months or every year, but there has to be predictability. Take that point, Nilesh. So now come in on the extent of money that you folks have been getting and then putting in the market, and thank God for that, right? Even yesterday, there was almost net buying of 9,000 crores from domestic institutions. We had Ramdev Agarwal on the channel yesterday, and I mean, he picked up some input saying maybe February the flows would slow down a little bit as eventually people kind of get hit in terms of sentiment. But what's your sense? And with this kind of deployment, because the net deployment on a daily basis has been really huge, with this kind of deployment, what is the net cash level industry-wide when we're talking about Indian mutual funds? And what is the flow situation right now?
So one should be, will flow start slowing down a little bit? Answer is yes. There are experienced investors and there are inexperienced investors. In March 20, when markets corrected very, very sharply, our SIP returns had become negative for 3 years. That did deter some investors and they stopped their SIPs. It also excited some investors and they topped up their SIP. Majority people were buyers during dark days of March 20 when markets were falling like a stone. And today they are rejoicing. Despite this correction, they are sitting on healthy double-digit return. So my feeling is that the experienced money will use this correction as an opportunity to buy, albeit in a calibrated manner, not in an aggressive manner. There will be undoubtedly some inexperienced money, mainly coming on direct platform, looking at last 6 months' performance. When they see negative return, they are likely to stop their flows or redeem money. My recommendation has always been that you have to follow your asset allocation model. And like for your physical health, you consult a doctor and don't go to the chemist directly. Same way for your financial health, you need to consult your advisor or mutual fund distributor. Don't invest looking at last 6 months' performance in direct plan on a platform. That's not going to give you financial freedom.
No, fair enough. But just the point on, so what you're saying that there has been at a net level, there's been some slowdown in February. And what would the industry-wide cash position be like? I mean, there were some funds that were running as much as 18-20% cash. I'm guessing a lot of that has been deployed in this brutal February sell-off. Any estimates of Overall, how much firepower are you folks still sitting on?
So in the month of January, the average cash balance, and I'm just rounding off number, was about 5%. That's roughly about 1,75,000 crore. The asset allocation fund and balance advantage fund, which have ability to take higher equity as market becomes cheap or valuation-wise attractive, that's roughly about 1 lakh crore. So there is about 2,75,000 crore worth of potential firepower within domestic mutual fund industry. Obviously, it does not take into account SIP flows and lump sum flows, which can continue to come.
All right. Hi, Nilesh. Good morning and good to see you. Nilesh, first of all, you need to compliment you. I recall more than a year or so ago, you all stopped taking inflows, SIP inflows in small caps, and that worked well. My question to you is, do you think that, small caps now, they've seen a fair bit of correction? Will you all be revisiting that? So if you could give us a brief idea on that. And also, we've got a new SEBI chief, and I believe that there is feedback that, is being taken from various market participants. What would your top expectations be to the new SEBI chief?
So one, SEBI has always an open door policy, and I'm sure under new SEBI chief, the same will continue. Undoubtedly, they gather inputs from all the investors, not just domestic, but also global. Very recently at Kotak Institutional Equity Conference, we had brought certain global investors to India, and SEBI was very kind enough to meet them in their offices. When we tell these investors that we'll take you to our regulator, they are surprised because that doesn't often happen in their market. And the transparency with which our regulators interact with them, the transparency with which their questions and queries are answered, and some of the myths in their mind which are removed are truly spectacular. There's a lot of misconception about registration process in FPI. But when they look at the data, interact with SEBI, and the willingness which SEBI officials are providing to process their application, it does leave very, very good impression with the investors. I'm sure under new SEBI chief, this trend will continue. We'll continue to give our inputs for the development of the market.
Okay. Nilesh, to round things off, and you've seen so many of these cycles, and you've seen bigger crises, including the global financial crisis, right? If I were to ask you, what are the signs? One sign would be FPI buying returns. That's one clear sign. But through the years, in the last 30, 40 years of your stock market career, what are the indicators or signs that you look for and that clearly tell you that, this is the bottom is almost here?
So, Surbhi, I'll answer this in a lighter vein first. When I go to party and no one recognizes me, no one comes nearer to me, everyone runs away from me, I know that is the bottom of the market. Now, no one is interested in stock market. That's the time to go and buy. On a serious note, as you very correctly mentioned, FPI stopping
So right now what happens when you go to parties? Are half the people coming to you, or is the whole crowd still coming to you? Where are we on the party circuit, if there are still parties happening?
You have still invited me on CNBC, so my guess is that party is just beginning, it's not ending.
Okay, but yeah, you were saying on a serious note, yeah.
FPI stopping their aggressive selling or turning buying will be one opportunity. The second could be the valuation. Finally, at the end of the day, stocks are slave of earning power. Value is what you get and price is what you pay. So if the valuation becomes cheap, let's say 14 times forward, 15 times forward, then certainly I believe markets will bottom out. The third could be geopolitical side. As of today, we are in a situation where America is putting tariff, their markets are going down, and everyone else's market going down. It's a lose-lose trade rather than win-win trade. If there is reversal in those geopolitical scenario, where from lose-lose we go towards win-win kind of situation, again, market will bottom out. Again, my limited point is that there's no way we can predict where the markets will bottom out. All we know, when the markets are cheap, we should be a buyer. When markets are expensive, we should be a seller. That is the dharma of asset allocation.
निलेश भाई ये बड़ा टफ टेस्ट दिया है आपने जब आप कहीं पार्टी में जाएंगे लोग पहचानेंगे नहीं, ये बहुत मुश्किल है. तो मतलब आई थिंक बहुत रुकना पड़ेगा फिर भी. Thank you very much for that. I really appreciate your time and good speaking with you there as far as markets are concerned.